That is Universal Robots' UR5 robot arm ringing the closing bell at the NASDAQ, the first time a non-human rang the closing bell there. It marks the debut of the new robotics stock index, RoboStocks. Overall, though, the markets did not have a great day, closing mostly lower on light volume after the Dow hit a new record high on Monday. But Chet Helk, CEO of Raymond James Private Client Group, says the market's current levels make sense.
If you think about it in historical perspective, though, the markets are back to a level just slightly above where they were over a decade ago. And yet we've seen tremendous amounts of innovation and prosperity occur, albeit not at the pace any of us would like to see. But it's a different world than it was a decade ago, and the markets are back to where they were. And maybe slightly above. There will be corrections, and yes, we'll go through it, but I'm a believer that there are better days ahead.
Several Federal Reserve officials spoke about the Fed's stimulus program, but they had a lot of different views, leaving investors uncertain about the Fed's plans. In Europe, shares edged lower on weak corporate results. The planned merger between U.S. Airways and American Airlines parent AMR could be back on plan. The companies will divest some of their takeoff and landing spots to settle a government lawsuit blocking the merger on concerns that it would hurt competition and lead to higher fares. Dish Network stock was a winner. The satellite TV provider is getting closer to reaching a deal with Disney Networks to keep their programming on board. Dish also reported better than expected subscriber numbers and revenue in the third quarter. Shares of D.R. Horton, the top U.S. home builder, soared in Tuesday's trading. Revenues jumped 40% thanks to a sales increase as mortgage rates eased off two-year highs.